Good afternoon, and thanks for joining us for today's webinar, Healthcare Industry, Emerging Issues Around Tax, Compliance, IT, and Risk Management. I hope everyone today has at least one or two good things to think about or takeaways from this webinar. There we go. One slide too many. I'm Janice Snyder, partner at McKonly Asbury and Director of Assurance Services. You can see there I spend a lot of my time working with healthcare organizations. And I have with me today partner Dave Hammerberg. We'll hear from him later in the webinar, the second half of the webinar. First up will be Director Lindsey Haney, giving us some for-profit and nonprofit tax updates, as well as Elaine Nissley, who's going to give us some risk assessment and internal audit updates. So a nice overview of a wide array of topics impacting the healthcare industry. Good afternoon, Dave and Lindsey.
Good afternoon.
Good afternoon.
Thank you. All right, if you're not familiar with us, McKonly Asbury is an accounting and business advisory firm with offices in Camp Hill, Lancaster, Bloomsburg, and Philadelphia, Pennsylvania. We offer a wide range of services to organizations in various industries. And for more information, please visit our website. You can see several of our industries listed there and a lot of our services as well. If you've joined us on past webinars, welcome back. If you haven't, our monthly webinars feature various business topics to keep you updated on what's going on around us. Please be sure to check out our website to catch past presentations as well as current information through our blog. All right, the first thing we have here today, we have just launched our first polling question. There will be 4 polling questions, but please make sure you answer this one. Please let us know if you need CPE for today's webinar. I think we've just closed our first polling question, so the vast majority of you do. For those of you joining us just for the healthcare updates, we welcome that as well. So we will get started. All right, as I said, we're going to focus on these emerging issues. So first up will be Lindsey Haney, Director in our tax department. So Lindsey spends a lot of her time on state and local tax issues, but she also works with me closely serving many of our healthcare entities, mostly the for-profit ones. Next up, we will hear a recording from Elaine Nissley. So she's our Director of Internal Audit, but she'll talk about a lot of healthcare risks. So even if you're not interested in internal audit, don't tune out. There's a lot of good takeaways and a lot of focus of boards and the healthcare industry and risks and things they're concerned about. And last up, we have Dave Hammerberg, our partner, talking about IT concerns. So cybersecurity, SOC engagements, HIPAA compliance, all sorts of things Dave will touch on. So we hope you enjoy all of these topics today. Questions from you will be really helpful, so that will make it a lot more interactive. So we hope you will submit your questions so we can answer them and talk about a lot of things that interest you today. So first up, I'm going to turn it over to Lindsey.
All right, thank you, Janice, and good afternoon, everyone. As Janice noted, I'm a Director of State and Local Tax here at McKonly Asbury. And today I'm here to talk to you about some of the tax topics directly affecting the healthcare industry. So let's get right into it. Let's start with the structure of these healthcare entities. So with any industry, the way that a business is structured, whether it's a corporation, LLC, or partnership, has significant implications both on the legal, operating, and the tax side of things. Healthcare entities are somewhat unique in their tax structure because we often see them set up as a group of entities with separate practices that might be owned by the doctors themselves, but managed by a separate management service organization or MSO. Sometimes this is necessary because states often have rules about who is allowed to own a medical practice, and sometimes that has to be the doctor. So it can also have unique tax implications, though, which I'll talk about a little bit more later on. Before I get into that, I want to talk about one area where structure becomes very crucial, and that is with acquisitions and mergers. Healthcare entities are constantly expanding, consolidating, or being acquired, and the way that these deals are structured is critical from a tax perspective. Unfortunately, it's also an area that can be easily overlooked, and the last thing you want is to find out after a deal closes that there are tax implications that you didn't expect. So with an acquisition, the deal can be treated as an asset sale or a stock sale. These are essentially what they sound like. A stock sale means the purchaser is buying the stock of the company. They're buying the company itself. Whereas an asset sale means that the purchaser is buying the individual assets of the target company, which could include physical assets like medical equipment or intangible assets such as licenses. From a buyer's perspective, the asset sale typically is much more attractive because there can be big tax benefits from stepped up basis in the assets, which translates directly to tax deductions. It's even possible to treat an acquisition as a stock sale for book purposes, but as an asset sale for tax purposes, as long as it's written correctly into that purchase agreement. So this is where planning is key, and it's typically always a good idea to have your tax accountant review an agreement before it's executed to make sure that the tax implications are what you expect. So switching gears, I want to talk a little bit about, go ahead, Janice.
This isn't directly related to acquisitions and merger activity, but some organizations are building new facilities or new hospitals or opening new locations. Are you seeing cost segregation studies, since we're on for-profit healthcare entities? Are you seeing them happening? And is that something organizations should be considering?
Yeah, cost segregations are definitely something to consider, especially it really comes into play when there are new facilities or new buildings being placed into service, because that can translate to immediate tax deductions. Now, that is typically only applicable, as you noted, to those for-profit entities, because it would be a reduction in the income tax liability of those entities. But we have partners that we work with that we can look into that, and it's definitely worth, at the very least, asking the question to see if that might apply to you.
Thank you, Lindsay.
Absolutely. So the next thing I wanted to talk about a little bit was private letter rulings. And private letter rulings are issued by the IRS to provide guidance on specific tax issues that taxpayers may face. Although they're not legally binding for other taxpayers, they can provide helpful insight and precedent for similar issues. And it's typically much preferred to use existing private letter rulings because it is very expensive to get one of these. Going back to structure, one interesting area the IRS has addressed in private letter rulings is that friendly doctor model, where there's several private letter rulings around the idea that management service organizations and the related medical practice, if they're both corporations, can actually file a consolidated tax return, even if the ownership in them is not the same. So we do see some unique things in the healthcare area like that, where it's just different than other types of industries. As recent as April 2024, I have that there is a private letter ruling addressing this arrangement. So there have been several, and there's a lot of details around it. So definitely something to look at is your tax structure and what is the most beneficial in your situation. Another key area where it's important to get your accountant involved is due diligence. So when you are looking at those acquisition deals, due diligence can become very important. It's generally the idea that you're uncovering potential liabilities or risks that could affect the future success of the deal. So it's asking all those questions that could become important later on. And it's very important to get help on this, because you wouldn't necessarily know what to ask. And that's where you want to pull in your attorneys and pull in your accountants, and ideally have them work together on due diligence to make sure you're getting all the information about the potential acquisition. Now, with those acquisitions and mergers often comes expansion into new states. So in today's day and age, you can expand into a new state by physically purchasing an entity there, but you also have to consider that it might be beyond just that physical medical practice. With the way that healthcare is done today, we have different options such as virtual medicine and mobile clinics and things like that. So I could really see the future of nexus for healthcare entities changing kind of going forward, because states typically are pretty aggressive on nexus for different types of entities.
Lindsay, on that states becoming more aggressive, is that a lot of the telemedicine and telehealth, things like that, or are you seeing that in other areas as well?
I'm mostly basing that on other areas, just because in general, states have gotten a lot more aggressive on like website nexus and things where it's not a physical presence. Back in like 2018 was when states started getting really aggressive as far as economic nexus goes, which is just sales into a state. So it's not too far of a jump to think that if, you know, there's a patient being treated in a different state, that could essentially be considered nexus if it's if there's revenue coming from that. I haven't seen any specific instances yet. It's kind of a very new area, I would say.
So something to follow closely and see how that evolves.
Yeah, absolutely.
Great.
All right, so last thing then on for-profit entities, I just want to mention, since I won't talk about this in the nonprofit entities, is they need to consider their income tax implications of different state nexus. So if the company is set up as a corporation, this could be a direct tax liability on any income earned in that state. And if it's a flow through, there's a lot of considerations that might need to be thought about, because if you have income passing through to owners, you have to think about how much income is passing through to those owners. Is there a consolidated state filing where they can file together, or are those owners going to have to be filing in that state themselves? So you don't want to have your owners have different implications that they didn't expect either. You also want to consider what the filing requirements are when you enter a state of, do you have to register with the Secretary of State? Do you have to register with the Department of Revenue? There's different rules in addition to all of the healthcare rules, and I'm sure all of the healthcare things that have to be registered for in different states. All right, so let's switch to the next slide. And I'll talk a little bit about nonprofit healthcare entities as well, because being a nonprofit, unfortunately, doesn't mean you're totally off the hook from taxes. So first of all,
we certainly see that first one, Lindsay, with unrelated business income taxes with a lot of our nonprofits.
Yeah, do you want to talk about that a little bit, Janice?
Sure. I mean, the IRS is pretty clear that you would owe unrelated business income taxes if it meets 3 requirements, and that's if it is a trade or business, if it is, number 2, regularly carried on, and it is not substantially related to furthering the exempt purpose of the organization. So the things we see, I've seen with some of our clients is like you're renting out a portion of your facility. I've seen it for, it could be a fun facility for birthday parties, or even if it's a conference center for conferences, other businesses to use that, or sometimes you're selling other product, t-shirts, paraphernalia, things like that to think of. And I've also seen advertising income. So that's just 3 examples of things to look out for. But is there anything else you've seen, Lindsay, or anything you want to add?
Well, actually, I was going to add that's another area that there have been a lot of private letter rulings. So that's something where if you're not sure whether or not something might be considered UBIT, then we could try to do some research and figure out if there's a private letter ruling around that area that you're looking at. All right, and then switching over sales and use taxes. So with everything sales and use taxes, the rules are different in every state, and there are various exemptions around medical supplies and equipment, whether the entity is a nonprofit or not. So being a nonprofit doesn't exempt you from the state sales tax requirements, and states have varying rules on whether things like prescription drugs, mobility enhancing equipment, or even home health care services could be taxable depending on the state. So the entity has to be aware of this, where it's required to pay tax and where it's required to charge tax. And I'll actually have a series of sales tax and state tax nexus articles coming out. So look for those coming out next month from our blog. And then finally, I want to touch on unclaimed property, and this refers to property that the entity is holding which rightfully belongs to someone else but remains unclaimed and may have to be remitted to the state after a specified period of time. So unclaimed property is regulated by each state, and they determine what the reporting period is for different types of property and what property is subject to unclaimed property law. So for healthcare organizations, this could be things like outstanding payments or credits on account to both patients and employees. If it's not handled properly, this could become an issue with the state, because there can be audits and possible penalties for not reporting and remitting unclaimed property to the state. So that's all I have on the taxes, unless, Janice, there were any other questions that came in or anything else.
I'm not seeing any questions at the moment, but we can launch into polling question number 2. So here it is. Which item most significantly impacts your organization? You can see several of the things that Lindsay talked about on your screen. So Lindsay, as they're answering that question, I know the burning question that I have, there's so many things going on at the federal level. Any predictions for future changes in tax laws?
Oh, the short answer to that is, will there be changes? Yes. I think that's almost a guarantee at this point. What those changes are, I mean, I would imagine similar to the Tax Cuts and Jobs Act back in 2017, 2018. We're going to have to be doing a lot of figuring out of where things apply to different companies and what needs to be done. I think there could be a lot of tax planning opportunities around that as well. But as far as specific things, we'll just have to wait and see. It's very hard to tell at this point what's going to happen.
Well, and we have our poll results. So thank you for that, Lindsay. I think uncertainty is kind of the name of the game right now with taxes. But we see here a lot of the topics you touched on. There's a wide spread of how this impacts our participants in the webinar today. So you see mergers and acquisitions coming to the top of the list and unrelated business income tax coming in next. So thank you everyone for your response to our poll question number 2. All right, we are going to move on to the next area that we have. And Elaine Nissley could not be with us today, but she is an expert in risk assessment, internal audit, and all sorts of things. She's going to share some data with us about some of the focus of boards. She has pre-recorded this portion, so we're going to listen to this for about 10 minutes and then move into some discussion about it with Dave Hammerberg, and then we'll move into his session. So we're going to listen to Elaine for about 10 minutes.
Today, I'm going to talk a little bit about healthcare risks and internal audit. We're going to explore some healthcare risks and challenges. We have areas of cybersecurity and IT governance, financial integrity, fraud management, third risk party management, human resources, revenue cycle. Those were listed and stated as the highest risks in the healthcare industry. And these are areas where proactive internal audit can add value to the organization. The December 2024 Protiviti study identified these top 10 healthcare challenges. There have been some recent high-profile attacks against health organizations, and they really highlight the ever-present and evolving threat landscape. And this is no surprise that cybersecurity has hit the list of the top 10 healthcare challenges. Account management came in number 2, and that again is talking about making sure that the access that your users have is appropriate. Fraud management, prevention, and detection came in number 3. IT governance was a 4th one, followed by joint venture and third-party risk management. We will talk about through the top 5 in more detail, but they go down to add accounts payable, finance and accounting, employee time expense reporting, HR benefits, and charge capture as being also on the top of the list. So according to Protiviti's study, 75% of the respondents indicated cybersecurity is the top-ranked internal audit priority for healthcare. 57% talked about co-sourcing with a strategic party or a third-party vendor to execute their IT audits. 36% performed a risk assessment more frequently than annually because the landscape is changing so fast. And 52% included a component of fraud within their audits. We're going to look at the key IT audits. We're going to talk about the cybersecurity, account management, and IT governance types of audits. In the cybersecurity, business resiliency is one of the areas that you can perform an internal audit. These types of audits, you evaluate the plans for continuing critical business functions when key systems or vendors are unavailable for extended periods. So has your internal audit department looked at your business continuity plan, verified that it's up to date, that it's tested, looked at your incident responses plans, verified that the key players for incident responses are going through tabletop exercises and understand what's required for them to do? Has your organization performed penetration testing? Have you done internal audits over vulnerability management, making sure that scanning across the environment is happening, that they're assessing that the scans are accurate and up to date and always scanning for the latest threats? And incident response, again, that goes with business resiliency. If you cannot respond rapidly and correctly to an incident, it can have a huge impact on your business continuity. Social engineering awareness. I guess typically the human element is the weakest link. And if the individuals in your organization are not aware of the potential for social engineering and do not know how to react, do not know how to assess an email before they click on a link, then your organization is at risk. So doing the social engineering assessment is important. Artificial intelligence has taken social engineering and phishing and vishing and those attacks to a newer level where it's very, very difficult to discern. Is a phishing attack unless your organization is proactively putting red flags out there and things to alert you to the fact that maybe you should look at that email closer. It's coming from the outside. It could potentially be an issue. And control consistency. Is your organization adhering to the IT control requirements? Have you completed IT general control audits? Again, those are some of the key areas where internal audit can add value to the business and provide assurance that proactive steps are being taken to protect the organization against cybersecurity attacks. Account management. The user account management is the second largest risk to emerge from Protiviti study. And it presents really some unique challenges for healthcare environments because of its complexity. Healthcare has protected health information that really needs to be protected, and you need to be fully aware of all the access points of where someone can get to PHI. You need to understand the diverse mix of user roles and really the immediate need for access to information for patient care. So you need to structure and manage that fine line between having the access you need and protecting the data. And user access reviews. Are the accesses being looked at and reviewed by knowledgeable people on a regular basis to make sure that the accesses are appropriate? Are people looking at the privileged access reviews and inspecting processes to identify and secure those accounts that have elevated access? And there should even be additional logging and review controls put on all privileged access accounts. When it comes to IT governance, has internal audit reviewed the strategic alignment between the business areas and IT? Does the organization's IT strategy support its business goals and delivery and effectively enhance the performance of the organization? Is the organization actually deriving appropriate value from its IT investments? Or is the money spent on projects and implementations of systems actually returning and providing a return to the organization. And the risk management area is, have you examined how well the organization identifies or manages IT-related risks through risk management frameworks? Do you have appropriate incident response plans, disaster recovery plans, and regulatory compliance requirements defined within IT? And performance management. How's the performance of the overall IT function and individual projects measured against established benchmarks or key performance indicators? And really, when it comes down to it, before systems are implemented, are there performance measures and key performance indicators defined and expectations set before you even start to begin to design and develop the system? Does IT have policies and procedures in place, and are they being followed? And are they updated regularly? And are there checks and compliance checks to make sure that IT is following any of the regulatory standards that they're required to follow? Our next area for consideration for internal audits is financial integrity audits. This ranked in the top 10 priorities for financial audit, and accounts payable tied for the third largest in this study. So are you actually looking at the financial integrity and testing accounts payable, the finance and accounting process, employee time, expense and reporting, and payroll? All of those are key areas which you need to maintain your financial integrity, and it's also areas where you should include a fraud component within your assessment as well. So accounts payable, some key areas to look at is segregation of duties, especially related to the vet processes like vendor setup, invoice processing, invoice payment. Accounts payable should also be included in the audit plan if there's a high volume of inquiries from vendors about their invoices and their related payments. Is there an invoice processing backlog? And could that point to inefficient or ineffective manual processing? To determine if there's a high volume of inquiries or backlogs, accounts payable due diligence would include reviewing the inquiry platforms, including email, and performing an aging of recent activities to assess timeliness of processing and payments. You know, an internal audit really should be looking at landmarks to determine whether risk and IT in accounts payable are mitigated through segregation of duties, governance controls over vendor master setup, and accurate accounts payable accrual processing and policies. In your finance and accounting areas, revenue recognition and reserve estimated accuracy is a good area to look at. Operational cost, determining whether supply pricing aligns with the contracted rates. Data integrity, looking at the completeness of data input into the organization's information systems and verifying that you have adequate controls over data integrity. With the automated systems today, there's a lot of controls that can be put in place to make sure that the data going into your systems has integrity. And then, of course, there's financial compliance with the Sarbanes-Oxley rule for internal control over financial reporting and the model audit rule, the insurance version of Sarbanes-Oxley. Fraud management, financial losses and healthcare fraud amounts to $10 billion each year. So it's not surprising. This ties with accounts payable for respondents' third highest risk. So again, fraud, accounts payable is one of the area where fraud frequently occurs. So internal audits do play a critical role in fraud management, prevention, and detection because they help to ensure the accuracy and reliability of the healthcare organization's financial reporting, their compliance with laws, the effectiveness of their internal control, and the protection of their assets. Third-party risk management. There should be a business impact analysis and determine the criticality of these third-party processes on the business. You should have a complete inventory of all third parties. All third parties should go through a vendor risk assessment. You should look at any SOC 1 or SOC 2 reports that apply. And you should do due diligence relative to the financial stability of the organization. And your business continuity plan should also consider the vendors that you rely upon, because if your telecommunications vendor goes out, do you have a backup, a third party to stay connected? So again, third-party risk management has a lot of different aspects to look at.
Great. We thank Elaine for sharing that information with us. There's so many things that we could talk about there, but we'll launch polling question number 3 before Dave and I start to have a dialogue about some of those things. So polling question number 3, which area is your organization's biggest challenge? We'll give you all a few minutes to answer that question. These are several of the things that Elaine touched on, but I'm going to ask Dave. I mean, Dave's a CPA, a certified information systems auditor, and we certainly rely on his IT expertise to support financial statement audits as well as many other things. Dave's a certified information systems security professional, a certified fraud examiner, and many other things. So I love when I get to partner with Dave on projects, but I'll just ask you, Dave, are you surprised that cybersecurity is the top healthcare challenge?
No, not at all. I mean, I think it doesn't matter the industry. I mean, healthcare we're talking about today, but by far, cybersecurity is the main issue. And you can see here the top one is cybersecurity, and then third-party risk management. They go hand in hand. A lot of the breaches are caused by vendors. So again, I think if you cover the cybersecurity IT governance, you're going to be addressing risk management. But again, it doesn't matter the industry. Cybersecurity is the biggest risk. And I know we'll get more into the slides here, but no surprise there.
Dave, I look at that a little bit in our audit, and when we look at IT general controls, I'm always concerned about that data integrity, but what I want to know is who can access the data and who can change the data. And that risk is so much more heightened in healthcare. And I know you help us look at and assess that as well with your expertise. So any comments on that?
Yeah, I mean, the problem, with what you said there is most people don't know where their data is, and what kind of data they have and how to protect it. We talk about, and we'll get into the slides, but, inventorying your data, inventorying your assets. That's step one in securing your environment, because if you don't know what to protect, you're not going to protect it well. So again, whether that's PHI or any other kind of information, you have to know where it is, classify that, and then protect it. But again, I go into organizations all the time, and they have no idea what they have, where it is. They spend all their money on the firewalls and all the hoopla around that and hope that the data is protected. But really have to define where that is.
Does that get more challenges as things are moving from on-prem to the cloud a lot more?
I would say from a HIPAA standpoint, cloud seems like it's an easier way to manage things, especially since, you said on-prem to cloud, obviously that's data, but as we're moving away from paper, that's a huge bonus, printing stuff, etc. So I think it's easier to secure stuff in the cloud. Now, a lot of people right now will have hybrid environments, and all those HIPAA controls have to apply. or whatever framework you're using. Now, I said HIPAA because everyone on this call is probably related to healthcare in some way, but yeah.
Okay, thanks, Dave. I saw the number 2 choice on this question was human resources or revenue cycle. There's a little bit of crossover there, but there can be 2 very different things. So I would be curious which one that really is. So thanks everyone for answering polling question number 3. And Dave, this kind of leads us into your IT concerns. What a broad area. So I know you have many things we can talk about here, but go ahead, Dave. I'm sure I'll have lots of questions for you.
Yeah, I mean, third-party risk assessment is a huge thing. The government for the longest time has put self-attestation in front of everyone. From CMMC for DoD contractors, for HIPAA.
Can you tell us what CMMC is now that you mentioned that? Maybe people know, maybe they don't. It's newer for me.
So CMMC is for DoD contractors, stands for Cybersecurity Maturity Model Certification. And it's a fairly new rule. December 16th of 24, it came out. Pretty much says if you're a DoD supplier, you're going to have to adhere to NIST 800-171. There's 3 different levels. Level 1 is self-attestation. Therefore, really, you're not getting a whole lot of information from the government. Level 2 is where most contractors will fall, and that is a third-party assessment that will go over all the controls for 800-171. We're looking forward here to the CFR 48 coming out. It's supposed to come out in March, but as we'll talk about, the government's sort of at a stage we don't know where the government is. So I don't know when that will be passed. Hopefully, sometime early this year. But CFR 48 will really tell people, you can't get this contract unless you have level 2 certification or level 3 certification. So it really forces individuals to do what they're supposed to be doing because they're having a third party assess that. Now, the government has been telling people to do that since 2016. So, and they've been self-attesting. So when this came around, everyone's like, we can't do this. It costs too much money. And the DoD is like, well, you've been self-attesting since 2016 on this. So again, that third-party assessment really forces people's hand to do what they're supposed to be doing.
So you threw out a lot of numbers, a lot of levels. I know you're talking about third-party risk assessment versus self-attestation. This is all around your IT controls, and my simplifying this is it's who can access the data and who can change the data, but I think it's a little more to it than that.
Well, the DoD really wants to put a cyber hygiene standard level across all of their suppliers. So the problem is China's planes are starting to look like our planes. We've lost billions of dollars in stolen data. So it's all about data. CUI, controlled unclassified information, is what the DoD calls it, and that's what they're concerned about protecting. Just like in HIPAA, PHI, that's what they're considering. But again, going back to the third-party assessment, HIPAA is great, but every organization I go in with doing a HIPAA assessment thinks they're 100%, but there's always gaps there. So it's useful to have a third party come in and do that kind of assessment. The problem runs into costs, right? So larger organizations can afford sort of a third party assessment, but the smaller organizations, they have the same controls to review. So if you're a covered entity, you're looking at over 300 controls to adhere to. And you have an organization coming in to look at evidence for those controls, making sure you're doing it right. It's a huge burden. So that is part of the problem that I see HIPAA controls not being adhered to. But there's a lot there, Janice. It's
I'm sure there is. So all the organizations here have to comply with HIPAA, and they could have a HIPAA compliance audit, but I think the average public company has about 200 Sarbanes-Oxley controls, but you're saying just to comply with HIPAA, you have to comply with 300?
Yeah, it's over 300 controls for a covered entity. A business associate would be under 100. So there's a big difference between a business associate and a covered entity. And again, a covered entity, everyone knows on this call is, healthcare providers, clearinghouses, or a health plan. And then a business associate is someone that is, a person or a company that is working for that covered entity and dealing with PHI. So we do a lot more business associate assessments, third party. I think because of the cost, that is a very reasonable cost. Reviewing and getting evidence for 307 or over 300 controls for a covered entity is a sizable event, especially for organizations that are smaller.
So would a smaller organization start with a subset of those controls or something more limited, or self-attest and ask someone else to look at a few over here? Like, how would that practically work? You do have to think
that is what we suggest. That is what we suggest.
I didn't even know that. So thanks, Dave.
when they come to us, usually the board's like, you got to have this, right? Or someone's pushing this, and they want everything. But when you look at the security rule, there's really only 6 more controls for a covered entity. So you're looking at 60, 66 controls. So that's a good place to start. I think once you get into privacy, that's where it really changes. And there's a lot more privacy rules for a covered entity than a business associate.
Okay, so they have to self-attest, right? You have to follow HIPAA. The question is, at what point do you get that third-party assessment? We talked about that with CMMC. We might not have DoD contractors here, but it's a good idea for healthcare entities to follow that. But this is kind of raising the bar super high on everyone.
Yeah. I mean, Janice, any idea how many data breaches healthcare companies had in 2023? And since I didn't prep you for this, so now you have to guess.
You did not. I'm not sure that I want to guess, but I know we have firsthand experience with quite a few, right, Dave? And we wish we didn't. I don't want any organization to need your fraud expertise combined with this IT expertise. And I'm glad you have it, but I think it's the greatest expertise, that fraud piece, that I don't want anyone to have to need. But I'm really grateful it's here. So we're certainly seeing an uptick in that in the last 2 or 3 years.
And this is sort of an example of where self-attestation and where third party helps. So according to HIPAA Journal, there's 747 major breaches in 2023. So that
is, thanks, Dave.
So that's 168 million different records. So that's a ton. And then you look at something like high trust down the list here, which is, was brought up, after HIPAA. They do all industries now, but it really focus, they have a large focus on healthcare. Less than 1% of people that were high trust validated or certified, those organizations had a security breach in 2023 or 2022. So less than 1%. So, it just goes to show you that a third party assessment really makes a difference in regard to your chance of breach. Now, you're not going to prevent everything. There's no way to do it. You're going to turn off all your computers. But again, you can see there less than 1%. And, high trust is a expensive assessment. But again, I got to say, reputation, what it costs to do the forensics, the cleanup, putting new controls in place, it's a fraction of the cost of doing the cost of high trust is a fraction of what it would cost to be breached. But the problem is, it's hard to sell that, right? It's hard to sell, spend this, so maybe this won't happen. But again, we're talking about 747 breaches in 1 year. I mean,
there's certainly ways like to baby step into that and start doing pre-assessments and self-attestation, of course. I think everyone, as you said, is already doing that and doing it perfectly, I'm sure. Right?
Yeah, I mean, there's a roadmap. It's not like today, tomorrow I'm going to have a high trust assessment and I'll be all better, right? Mm-hmm. It may be a year migration until you're ready. But again, you got to start somewhere. I always say in security, you got to be better tomorrow than you were today. And I think that it goes with healthcare as well. I don't think HIPAA is something that you give to your IT department and say, make sure we're certified. You know, large organizations going to have a compliance team. They're going to do internal audits, et cetera, and they probably have more of their ducks in a row. But these, you know, I would say mid-sized, smaller healthcare organizations really are the concerning factor for me.
Okay.
And then we get to SOC audits. Again, I see some healthcare getting SOC audits, but again, it really comes down to the user entity. You know, if you have a client of the healthcare organization that requires through their vendor management certain things, might be high trust, might be a SOC, I see them then getting that. These high trust SOC, they're really, or even the HIPAA third party, really controlled by people forcing the hand and saying, hey, do this or I'm not going to work with you.
So we've certainly seen more organizations get SOC audits. I mean, we're seeing an uptick in all of these and the demand for them. But what was initially driving more organizations to get SOC audits, and who's getting them? And maybe some of these people want to ask for them from more of their vendors.
Yeah, I mean, that is a top area of our firm, the growth area, probably the last 3 years. It's mostly service organizations. You know, it could be a data center, could be someone providing a service that has your data. And again, you know, we're talking about SOC in a healthcare situation here. So I think your customers are more going to be asking for third-party HIPAA assessments. That's what we're seeing more of. But again, you could be asked for a SOC audit. A SOC audit is basically going over the trust services criteria and going through and making sure that you have controls in place to cover your data. I would say high trust is definitely sort of the king of, you know, you might have, it covers everything. Right, you know, if you find someone that's high trust validated, you can really trust their internal security. So it's from one stream to the other. I would say SOC, HIPAA, high trust. In that kind of order.
The providers on this call, though, might be one. I know we see SOC audits and a lot of audits we do for payroll over investments. Health and welfare plan providers that have your data. So there might be some providers on this call that want those SOC audits from people that have their data.
Oh, 100%. Vendor management program is not complete unless you're getting some kind of security questionnaire, SOC 2, SOC 1 from your customers. You know, every healthcare, any industry should be doing third-party vendor management. And again, there's different kind of SOC reports. There's SOC 1, which is over financial controls. You know, so for example, Janice, you mentioned the payroll company. You know, if you have a payroll company, I'd be asking for a SOC 1 to see how their controls are operating over their financial data that they're processing. And then a SOC 2, again, service control. How are their security around the data that, you know, they have of yours? But again, it really depends on what third-party assessment you should do, depending on what clients you have.
All right, but then if I look at the last 4 things on the slide, self-attestation is sort of the lowest level of assurance or comfort, and then kind of SOC audits, high trust, HIPAA compliance. Well, high trust is the highest, right? So it would be. It is. Yeah. It is. Okay. Just trying to put an order in my mind to that, Dave.
Yeah, I mean, self-attestation really doesn't work. I mean, I don't know how many times we've tried it. And it just, you know, there's no teeth behind it. And, you know, the OCR is not doing audits of, you know, the HIPAA, you know, for a while. There's a lot of slack right now, I feel, in the HIPAA self-attestations, for sure.
Okay. All right. Anything here, Dave? Are you ready to move on?
Man, I was waiting for Lindsay to ask me a question.
I'm sure she'll jump in later.
Yeah, I find it interesting, Dave. You're talking about how the cloud is more secure than on-site, and that kind of stuck with me because, you know, call me old-fashioned, but it just doesn't seem right. So can you talk about that a little bit more?
Yeah, and that's not for, you know, it could be more insecure if it was done incorrectly. But if it's the security is done properly in the cloud, you think it would be more secure. For one thing, there's more resources in regards to, you know, AWS, they're going to have a larger scale of resources to put into security. The other thing is on-prem, you have to deal with physical controls. Really, you're relying on the cloud service provider for physical controls. And then updates, et cetera. You're relying on, a team of professionals as opposed to maybe you have 2 or 3 security guys or girls or women. If it's done right, I feel like it's more secure. But it definitely could be done improperly with access controls, et cetera, and lead to some very bad situations.
So I'm picturing the safety deposit box at the bank versus, keeping it under your mattress kind of situation.
Right. Yeah, the bank's got armed guards. They've got all sorts of resources to protect that. And very similar, AWS is going to have a whole lot more put together to protect that data, as opposed to, have a data center inside an organization with a locked room, a key, there's going to be, a lot more money to put into that security. Good question.
Right, and move on. This is your questions for you, Dave. So around IT, what is the focus of the board? And it sounds like that's changed and evolved. Like cybersecurity is #1 top healthcare concern. I think boards are starting to focus more and more on that too. But what are you seeing, Dave?
For sure. I mean, 10 years ago, the board could care less. There was no one on the board that understood security. We're definitely seeing new board members that understand security, and it's a priority. So that's great. I can't say that's all the way through every board, but it's definitely changing in the right direction. So happy to see that.
I think all those 737 breaches are changing that.
Yes, yeah, I agree. I think, that's opened a lot of eyes. And I think, it doesn't take much to see, hey, it's going to cost less to prevent than it is to fix. So I think there's an easy argument there when presented well.
So, and Dave, you've touched on self-attestation already, that it's really not sufficient. There's a lot of gaps and holes in that. When you see assistance, go ahead.
The only caveat there is if you have an internal audit division, that's actually doing the audits of that area. I could see that being sufficient. But other than that, I mean, it's hard to, everyone thinks they're doing everything 100% right. If I ask Lindsay, that tax return is at 100% right, she's going to say yes every time until, I'm not reviewing it, but till someone else reviews it. And then you find
a reviewer, she's got it.
My tax returns are always 100% correct.
That's what I'm told. But yeah, so it should be, you should always have a third party. But again, internal audit would be a sufficient resource to use for that.
Great. So what's changing with HIPAA compliance?
That's a great question, because not a whole lot of major changes have come across since 2013. There's been minor updates. They've also done some volunteer, compliance things that, again, volunteer self-attestation just don't work. I believe it was January 6th, proposal came out for some updates to the security rule. And I believe that is in comment period until beginning of March. And that came out with a bunch of different updates to the security rule, but none of them are outstanding. They're all basic best practices: vulnerability scanning, pen testing, risk assessments. Everything that you would think HIPAA would already have, they have. Now they also, in that area, putting timelines, do this many times a year, et cetera. But, when I look through the list, I don't see a ton of things that I don't see anything that I'm like, wow, this is new. This is something I don't see happening. So again, that's coming out now. Who knows with the government when that will pass? But I'd assume sometime in 2025 we're going to see the security rule update. There's been a privacy rule sort of proposal out there for a long time. I'm not sure I see that coming out in the next year or two. It's just, I don't think it has enough traction. But again, that privacy rule then is made to sort of lower the burden on the covered entity and help the user get more out of it, from taking photos of invoices or PHI. But like any regulation, I don't think any regulation ever unburdened anything. So I think there's going to be an increased burden on covered entities, at least initially. And I'm not sure I see it coming down.
Okay. Well, I want to flip to our last polling question, but any final comment, Dave? Because you can still talk about those last two questions as we move to our polling question. So final comment?
No, I think we can move on. All
right. This is our fourth and final polling question. Tell us something you'd like to know more about. Shameless plug, ethics CPE in October. I know lots of people need this, but any of those other topics, we'll just give you a moment.
And as Janice says, people are looking at this quick poll. You got to start somewhere. And I think if you're not doing anything right now, inventorying where your data is, where your assets are, doing a risk assessment, starting there, and then moving into some kind of framework. Obviously HIPAA is a healthcare framework, whether that's high trust. High trust has 3 different levels, E1, I1, and R2. E1 is a great place to start, very similar in difficulty to a SOC 2, and then moving up to I1 and then virtually R2. But again, those all build on each other and a great place to start.
There we go. We just closed the poll. So, yep, we do see coming up, I think it's in October, we'll have an ethics webinar and upcoming tax changes. There you go, Lindsay. A lot of food for thought for the future. And the next close one is everything IT, Dave. So a lot of things we touched on today. So
sounds great.
Certainly high level overview there. All right. So this is the time where we will answer any questions. You see contact information there for, I thank Dave and Lindsay for their time today, but I am going to ask them what's their one takeaway? Lindsay, you want to go first? One takeaway from everything you heard today.
Yeah, I would say the biggest thing is just it's better to think about this stuff early than deal with the fallout later. The planning seems to be key here.
I think that's true for tax, due diligence, all the things you touched on, and all the things Elaine and Dave touched on. So that's a good one. Plan. How about you, Dave?
Yeah, I mean, I've got to echo that. I mean, from a tax standpoint, I mean, planning ahead seems like it's going to save you a lot. And planning ahead, you're going to take advantage of any deduction, credit, et cetera, that you could possibly. And then on the IT side, I mean, you've got to start somewhere. So don't put your head in a hole. You've got to figure out where you want to be. And ultimately, if you're a healthcare covered entity or a business associate, you got to make sure that you adhere to the HIPAA. And I wouldn't wait until the rules passed. I mean, it's going to compound. But again, we're doing HIPAA assessments now just over what is currently in HIPAA. But you got to start somewhere.
Great. Thank you both. I mean, my takeaway was the cybersecurity. Like, that is the #1 concern, and that ties into so many different things. But we thank everyone for joining us today for the webinar. If you have any further questions regarding anything Lindsay, Elaine, Dave, or I talked about today, please feel free to contact us. A recording of today's presentation will be posted on our website and social media sites in a few days. And for those of you who requested CPE and answered the 4 polling question, those certificates will be sent out within the next month. And the last thing that we have to tell you about is coming up on February 27th, we have our webinar. Registration is open for SOX. So Sarbanes-Oxley, are you still testing too many controls? Maybe something you can streamline, test a little bit less, and turn some of that over to your IT controls. Although a lot of those are in Sarbanes-Oxley, they just might look a little different when you're looking at HIPAA compliance or high trust. So thanks again for joining us today, and enjoy the rest of your day.